When Warren Buffett started talking, he talked about how great it was that the economy had recovered, but how people's memories of the recession were still fresh and raw. If you said the year 1929 out loud, people would react as if you had said 1776 or 1492. Everyone there knew exactly what you were talking about. In 1929, at the age of 26, his father began working as a security salesman for a small local bank. He was working there at the time. He was a stock and bond salesman, but stocks were his specialty. You don't feel like going out and talking to people when your stock portfolio has dropped by 48% since you sold it to them a few months ago. He was a stock and bond salesman, but stocks were his specialty. In the late fall of 1930, the majority of people in the United States were still ignorant that the country was already well within the Great Depression. They thought it to be a recession quite comparable to at least a dozen others that had occurred in the past when they made this assumption. Although this did not usually occur when big stock markets were open, there had already been a considerable degree of professional activity in the United States at the time, and as a result, it did not appear as though this was anything that was much out of the ordinary. During the 10 days following his birth, the stock market actually increased by 1 or 2%. From that point on, the stock market dropped from 240 to 41, which was a notable reduction since if someone had given me $1,000 on the day he was born and invested it in the Dow average, my money would have increased to $170 in less than 2 years. In terms of having a wide variety, America's decline of 83% in 2 years and 89% from the peak on September 3, 1929 was astounding. In the meantime, his father went to the bank where he worked to close his account a little less than a year after he was born. The bank had to sign off on the closure, so he didn't have a job and had 2 kids at the same time. His father ran a grocery store, but he and his brother Charlie also worked for his grandfather. Warren worked there in 1941, and Charlie did so in 1940. So they were strangers, but Charlie's grandfather told Warren's father not to worry about their groceries. When Warren Buffett thinks back on that time, he thinks that economists didn't give it that much attention. But if we'd had the FDIC, which began on January 1, 1934, things might have been different. It was part of the big changes that Roosevelt made to the law when he took office. But he thinks that the Great Depression would have been very different if we had the FDIC. People blame Smoot Hall here and there, and there are lots of other things, as well as the margin requirements in 1929. All of these things contributed to the recession. But if more than 4,000 banks fail, that means that people in those areas saved and put their money away, but when they went to get it, it was gone. And you know what happens in all 48 states? Your neighbors and family members go through the same thing. It's incredible that they have an effect on the mind. So, Warren Buffett thinks that the FDIC is a great thing that came out of the Great Depression. And the world would have been a little different. He is sure that if the bank failure years hadn't just happened and people who thought they were savers went to the bank and saw a sign that said closed, they would still have their money. Therefore, the Great Depression lasted for a very long time, but its consequences lingered in people's thoughts for a significantly longer period of time than they actually did. After the end of World War II, we fully committed to the Keynesian economic theory and began running massive deficits in our budget. This caused our debt to reach a level as a percentage of GDP that it had never been before and hasn't been since. This level has also remained unchanged since it was reached. Even though the economy had made significant strides toward recovery, many people continued to feel anxious. The tales of their lives and times that parents shared with their children. The 1929 turned out to be a significant year that people remember. It had a fairly large impact on the overall value of the stock market. The young man, who was born on August 30, 1930, had completed his education by January 4, 1951, long before the stock market returned to its previous state at the point in time. Consider the years 1920 or 1929 to 1951, keeping in mind that the country had only been around for 140 years at the time. It's been 20 years since then. It's hard to think that our nation is 231 years old. It's been around for such a long time. People were unaware of the country's true wealth and the progress being made by corporations because the economy was stagnant for a considerable amount of time. However, this much time was needed in order to come back onto the market, a level of cost that was equivalent to what it had been 20 years prior when he was born. So, if you consider the fact that we have been going through this for a few months now, and that we will continue to go through this for a very long time, and that we have no idea how it will end, people living in the 1930s were unaware that I was going to be born, but they persisted, kept going, succeeded, and ensured that the American miracle would continue. But it's interesting that the Dow was only around 280 at the beginning of 1954. And he remembers 1954 because it was the best year he ever had in the stock market. At the beginning of the year, the Dow was at 280. By the end of the year, it was just over 400. And as soon as it crossed 381, that well-known number from 1929, when it hit 400, everyone wondered if it was 1929 again. In 1954, it was a different country, so that seems a bit unlikely. But that was the most common question, and he answered it so well that I worried we were about to jump off another cliff. That's because the 381 of 1929 had already been passed by Senator Fulbright, who later became very well known in the Foreign Relations Committee. But he had already been passed by the Senate Banking Committee, and he called a special investigation into her. He was really wondering if we had built yet another house of cards. In March of 1955, when the Dow was at the level of 405, his committee convened a meeting of 20 of the finest miners in the United States in order to determine whether or not we had once again lost our minds. Even though we had been through a lot of difficulties in the past, and even though the Dow was at 400, that was how the country thought. It's really rather incredible, because his employer worked in New York for one of the 20 persons who were summoned down to testify. His boss is aware of the fact that we didn't really think America was what it was. According to what he recalled, Ben Graham was one of the 3 sharpest persons he had ever encountered, and he was testifying about the Dow at 404. He had one sentence right at the beginning of his written evidence where he said, "And when I was testifying about the Dow at 404, the stock market appears to be at an all-time high. It is lofty, but not quite as high as it seems from a distance. Since then, we have experienced the full force of the American tailwind, and at the time that we made the slide, the Dow was somewhere about 24,000. So, you're looking at a market right now that has made $100 for every $1. All you had to do was buy a cross-section of America to make people think you were an American. The Wall Street Journal wasn't necessary. You didn't have to look up how much your stock was worth. No one asked you to pay a lot of money or fees. You just had to think that the American dream was still going strong. But between 1929 and 1954, you had this testing time, as shown by what happened when it went back up to 380. You went through this hard time, and some people really did lose faith. They just didn't see what America was capable of. And we discovered that when it comes down to it, nothing can stop the United States of America. It has consistently been the case. It is possible that it was disrupted by the most terrifying of scenarios when you had a war with one group of states fighting another group of states. It is also possible that it was tested once more during the Great Depression. And finally, it is also possible that it is being tested to some degree right now. But in the end, the answers have never been against America, and in his opinion, this is as true today as it was in 1789, and it was even true through the height of the Depression and the Civil War. What are your reactions to the information that Warren Buffett presented? How does this information assist you in the management of your financial resources? Leave a comment below with your comments so that we can get a sense of how you feel about the information that we are providing to you in this video. Thanks for watching. Goodbye.